Good morning. Market Day Report is on the air. Okay, we'll start with this. Not a full trading week this week, as Thursday is a federal holiday, Juneteenth. So we'll trade 3 days, take a break, come back and trade on Friday. But how are we starting the week? Let's look. Overnight action for the corn market. Red, down 6 on the old crop at 438.5. And the December at 437 3/4 fell 5 1/4 cents. Soybean trade overnight. The bean market now in positive territory for the week, the month, and the year. The annual gain right now on beans, 6.2%, 6 cents higher overnight, 10.60 3/4. Wheat market, we'll start with Chicago. And it was lower, July down 8 1/4, 535.5. Hard red down 6 1/2 at 534 1/4. And a market that settled higher during the day session for 3 consecutive sessions. Spring wheat lower overnight, 658 1/4, down 3 3/4. Cotton market, December is new crop up 7 at 67.91. Let's go to Springfield, Missouri. President, Midwest Market Solutions is Brian Hoops. Good morning, Brian. Okay, kind of a shorter trading week.
It is, Tony. We do have a holiday this week. Good morning, everyone. Hope you had a great weekend. And happy belated Father's Day to all the dads out there. So Thursday is Juneteenth holiday, a federal government holiday. Banks will be closed. Brokerage offices will be closed. No trade on Wednesday night or all day on Thursday, but grain trade resumes Thursday evening, livestock on Friday. We also have several reports coming out this week. We have NOPA Crush report out today, crop progress out this afternoon, cattle on feed on Friday. And of course, we have no shortage of volatility and a lot of news. EPA mandates are much higher, or requirements are much higher than what was previously thought since soybean oil limit up gains on Friday. We have expanded limits today for the entire soybean complex. The soy complex is expanded, and soybeans did follow the bean oil higher last night, despite the good growing conditions that weighed on corn and wheat overnight. And, we haven't even touched on what's going on overseas with Israel and Iran and the crude oil market, which is about $6.50 off of last night's highs, as that market has pulled back considerably, anticipating we may be reaching a peace agreement instead of going to an all-out aggressive war.
Yeah, and I'm glad you brought up crude, because it seems as though crude will be working its way into the conversation no matter what we're talking about. So speaking of no matter what we're talking about, how about we take a break and we'll come back and talk about livestock futures. Market Day Report continues in a moment. So cash trade last week started developing on Tuesday at 235 in the south and went to 240. And mostly, nearly everything we did in the south was closer to that 235 level. So even though there was a 240 in there from Kansas, closer to 235. Now, 242 got it done in the north, though light trading at that 242 level and dressed at 380. Live cattle futures on Friday settling lower, down 3 1/4 cents. June at 224.95. Look at that, just a nickel off the session low. 212.25 on the August. That was at the session low. Feeders, we saw losses as well. 305.97 on the August, down 5.27. You rewind the clock a year ago and you say $5 losses in feeders, and we've got major panic. I don't know that we had major panic after the lower trade on Friday. Maybe some concern. Front month July hogs higher, nickel lower on August, 110.12. Spring back in Brian Hoops, Midwest Market Solutions. Now again, I said panic. I'm sure there was some concern with the lower trade, but not the panic, right?
I think that's a good way to describe it. Yeah, nobody, I think, really was panicking that a top is in the market, but little concern that prices turned lower and so much lower. But we did have a lower stock market. A lot of concerns about inflation increasing on Friday with crude oil prices sharply higher, and calls over the weekend were 120 to $200 a barrel type calls for crude. So a lot of concerns that with inflation rises, consumers would have less money to spend on products such as high-priced beef. And we get past the 4th of July, we're past Father's Day now. Now, if we get to the 4th of July, we also may start to slow demand just a little bit, just from a standpoint that a couple of our main grilling holidays are behind us. But looking ahead to this week, we had cutout values move sharply higher last week. Choice was almost $10 higher. Select was about $6.50 higher. Because the cash trade didn't trade higher last week, it was steady with the prior week. That means Packer margins improve. Now they're still deeply in the red, but they are much better than what they were. And if cutout values can continue to move higher this week, that will help out those Packer margins as well. Cattle on feed comes out Friday afternoon. Looking at the estimates on feed and placement numbers, they're going to be down considerably from a year ago levels. Once again, a couple percent in on feed, 3 to 4, maybe 5% in placements. It looks to be another very friendly report, just reminding the industry how tight these supplies are. A lot of feedlots and producers telling us that packers are scrambling, trying to get cattle bought out for the next week to 2 to 3 weeks, as they're having a tough time securing the number of cattle that they need to make their daily kills.
Yeah, yeah, and again, that cattle on feed report set to come out Friday after the close. Brian, great to see you. Brian Hoops, Midwest Market Solutions.